Okay, let's talk about one of the most serious letters you could ever get from the IRS, the final levy notice. This isn't just another warning, folks. This is a 30-day countdown to protect everything you've worked for. So when this letter shows up, it's basically the IRS giving itself the legal green light to seize your assets. We're talking bank accounts, wages, you name it. But here's the thing. Buried inside this very same notice is the one legal tool that can stop the whole process dead in its tracks. And we're going to show you exactly how to use it. All right, first up, let's break down what this final warning, the CP90 or LT11 notice, actually is. You might see it called a CP90 or maybe an LT11. They look a little different, but don't let the names fool you, they mean the exact same thing. This is the end of the line. It is the final legal notice before the IRS can start taking your property. It's also your last official chance to request a hearing and stop them. Now, you've probably gotten other serious-looking letters before, right? Something like a CP504. Well, this one is a totally different beast. Those other notices were just warning shots, and honestly, they came with very limited rights. The CP90 or LT11, though, this is the final notice, and it unlocks your full collection due process hearing rights. This is the real game changer. So that brings us to the most urgent part of all, your 30-day window. And believe me, the clock starts ticking the second that notice is printed. Think of it like this. For the first few days, you're in the green zone. Your job is just to review the notice. But then you quickly move into the yellow zone, and this is where you have to file Form 1253 to request that hearing. If you wait, if you let that clock run out and hit day 31, you're in the red zone. And at that point, the IRS can take your assets without another word. So, how do you slam on the brakes and stay out of that red zone? Well, you do it by unlocking your single most powerful right, the collection due process hearing. So what does this hearing actually get you? Well, first off, you get to talk to a neutral IRS appeals officer, not the collection agent you've been dealing with. The second you file, it immediately freezes all levy action. It gives you a formal chance to propose real solutions, like a payment plan. And get this, if you don't agree with the final decision, you can take your case to U.S. tax court. These are seriously powerful protections. And you know, the crazy part is, securing all these rights is surprisingly simple. All you have to do is file Form 1253. It's just a one-page form you download right from the IRS website, fill it out, and this is important, send it by certified mail to the address on your notice. The only catch, it absolutely positively has to be filed within 30 days, no exceptions. And hey, this isn't just some legal theory. This stuff works in the real world. Take Sarah Martinez, for example. By filing her form on day 12, all levy action against her stopped immediately. That simple piece of paper saved the $22,000 sitting in her business bank account. The effect is immediate and it is powerful. Okay, so filing the form puts a freeze on everything. That's huge. But what actually happens in the hearing? Well, this is your chance to propose a real path to resolution. You've got a few main options here. If you have a steady income, you can propose an installment agreement. If your ability to pay is really limited, you might go for an offer in compromise and try to settle for less. And if you're facing a severe hardship, they can place you in currently not collectible status. The whole point is to find a solution that actually fits your financial reality. Let's circle back to Sarah's story for a second. By using her hearing rights, she was able to propose an offer in compromise that reflected what she could genuinely afford. She settled her $18,500 tax debt for just $9,250. That's a 50% reduction, all because she exercised her rights. All right, let's wrap this up by talking about what not to do. It's so important to avoid these common and very costly mistakes that can cause you to lose everything. So there are 3 critical mistakes to avoid at all costs. Number 1, just ignoring the notice. That's basically giving the IRS a green light to take your stuff. Number 2, missing that 30-day deadline. If you do that, you lose your right to this hearing and the automatic protection forever. And finally, not filing Form 12153. It is the only thing that legally stops the process and unlocks all those rights we talked about. So it all comes down to this. The IRS has handed you a 30-day clock, but they've also handed you the powerful legal tool that stops it. The only real question left is, will you use it?